Hello, welcome back. This is Focus with Kelly. I'm Kelly, and today I want you to focus on profit and loss. We are in the beginning of the month, and I want you to focus on this one simple formula. Every business owner needs to know it, and that is revenue minus expenses equals profit and or loss. Why is that formula important? Because it gives you a clear, concise picture of whether or not your business made money. Sometimes we think because we made sales that the business makes money, and that isn't necessarily true. $100,000 in sales and orders does not mean $100,000 in profit. So, what does that mean for you in your business, right? How do I calculate this? Well, it's simple, right? For your revenue is basically all the money that's coming in. That is money, all the money from your sales. If you sell something within your business and you utilize that cash in your business, that is considered revenue. All incoming monies, every last cent. Money from third party merchants, money from PayPal, Zelle, if you're using Cash App, credit card sales, every single cent that's coming into your business, that is considered your revenue, right? So you want to take up all the money, you add every last cent that comes together, right? You take that number and you want to place it to the side. Next, you want to get your expenses. That is everything that's every single cent that is leaving your business. That's utilities, that's your overhead, that's payroll if you have it, marketing, advertising, office supplies, packaging, whatever is costing you to spend money in your business, that is your expenses. You want to add up all of your expenses and you want to take that number, right? So now you have everything added up from your revenue. That's your incoming sales, incoming monies, adding up all of that. Then you have all of your expenses. That's everything that's going out. You're going to add up all of that. You are going to deduct, subtract, take away, whichever term you're familiar with and works for you. You're going to take away, subtract, or deduct that number from your revenue. And it's going to leave you with either a positive or a negative number. So if that number is positive, congratulations, your business has made a profit. If that number is in a negative, no congratulations for you. But your business did not make a profit for that month, right? And you want to make sure that you're doing this every single month. A lot of times this happens at the end of the month where businesses are starting to analyze their P&L. P&L is basically a profit and loss statement. That's revenue minus expenses equals profit or loss in its most simplest form. That's why it's also important for you to have a business checking account so you're able to monitor these expenses. If your business did not make any money and you're just starting out, don't panic just yet. Because guess what? A lot of times when you're just starting a business, a lot of times you're putting in a lot of money. And we call that investing. And sometimes we don't immediately see a return on our investment because we're just starting out. But for some of you who are further along, maybe you're 6 months in, 12 months in, you really have to start analyzing why your business isn't making money. Is it pricing? Are your products not priced correctly? Or are you overspending? Or one of the biggest things that I see in the beginning is when you start your business, you get so focused on branding and you want to have these special packages, all these special boxes. You want to have everything monogrammed and have your logo on every single pack on all your packaging. And guess what? That's really just not important in the beginning. Now, if you want to establish your business as far as luxury and you want everything to be ABC, you want everything to be stylish and whatnot, that's fine and dandy. But guess what? Sometimes you just can't afford to be fancy, especially when you're just beginning. So sometimes we have to just think back, you know what? These regular postal boxes are just going to be okay. The box that says USPS is okay as long as what's inside of the box is of quality, right? Because 9 times out of 10, unless you're like a super luxurious brand, that stuff going into the trash. All that fancy bubble wrap and packaging and purple special colors and everything, as soon as they get their package, they're throwing that in the trash. That's your money that's going in the trash can. If you can't afford it, Simple, basic packaging is all you need. But that formula, revenue minus expenses equal profit or loss, is so important for your business. It is a formula that you should be taking note of every single month. You want to notate all the money that your business is bringing in, and more importantly, you want to notate all the money that's leaving your business, everything that's costing your business money, because you want to say, before you make a purchase, does this make sense? Am I going to receive a return on my investment? Right? Because you want to get to the point that your business, your business profits, that is what is paying your expenses, not you having to go into your personal account or you having to go beg Paul to rob Peter. I don't know how they go. You don't want that. You don't want to have to depend on that. So it's important that you recognize whether your business is making money. It's not just about having the sales. The sales are important, but what is leaving the business is equally as important. It doesn't make sense to have $100,000 in sales and you may have $110,000 in expenses. That means you are losing $10,000. So it's really important to begin documenting, if you haven't started already, whether or not your business is profitable, analyzing the data that your bank statements give you so you can see where you're spending money or maybe where you can cut costs if you're not if you're not able to be profitable. Because I don't care what nobody says, the number one reason why anyone is in business is to make a profit, so remember this formula. It's simple, simple, simple. Revenue minus expenses equal profit can't even get out. Revenue minus expenses equals profit in or loss. That's the formula, and that's what you need to think about every time you price or every time you do new pricing, every time you have a new sale. You need to think about, how much profit am I going to make? How much is this sale going to cost me? How much is the packaging going to cost me? How much is it going to cost me to ship this order out? Those are the things that need to be in the back of your mind, because you need to be able to make money in your business. If you want that financial freedom, your business has to be profitable. Revenue minus expenses equal profit and loss. If that number is positive, you've made a profit. If that number is negative, you have lost money in your business for that month. So just rethink and reevaluate what you need to do differently for the next month. And like I said, if you're just beginning your business, like, don't trip. Because a lot of times when you're just starting out, you're investing, you are putting money into your business, and you might not see a return immediately. But once you start seeing sales consistently and you starting to see money come in consistently, you have to think about your expenses as well. The expenses are just as important as your sales and your orders. So I hope you got something today out of this video. This is Focus with Kelly. I'm Kelly, and today we focus on profit and loss. Have a good day. Oh, like and subscribe.